Markets are volatile, but this is the time that we cannot panic. I know it is difficult to see your portfolio take a hit every day, but we strongly suggest that the best course of action would be stay calm, average out the cost of your quality holdings and start investing in fundamentally strong stocks. And to help you out, in this video, we are going to talk about the 3 stocks that we are buying. The first company is the leading manufacturer of blue pigments, which is used for ink, plastics, paint, textile and paper industry. This company has globally benchmark manufacturing capabilities. I am talking about Asahi Songwon Colors Limited. So driven by the demand for printing inks from the packaging industry, the global pigment market is expected to reach $36.36 billion by 2030. And this company supplies pigment to some of the world's largest colorant companies like DIC Corporation of Japan, BASF of Germany, etc. And owing to high switching costs for these corporations, the company has long-term contracts with them and have a record of not losing a single customer from last 30 years. Now, what about the future? So now due to anti-China sentiments, customers have started looking for manufacturers to meet their demand for azo pigments, that is red, orange and yellow pigments. The company took advantage of it and have entered into a joint venture with UK's leading color manufacturer Tennant's Textile Colors Limited to manufacture red, yellow and orange azo pigments. In April 22, they have entered manufacturing of bulk pharmaceutical ingredient or APIs by acquiring 78% stake in Atlas Life Sciences Private Limited. And if we talk about corporate action, so this company is engaged in frequent buybacks of its share. Now, very recently, in June 2022, they bought back 3.8% of equity at a premium of 23.95%, and also in 2020 they bought back 2% of the share capital at a premium of 37% of market prices. The expansion of business along with customer stickiness, frequent buybacks and strong fundamentals is what is making this company very attractive for investors.
You must have seen many advertisements on the TV showing cosmetics containing an acid called niacinamide. Mamaearth's face acne serum, Derma Company's face cream and Bodywise's face lotion are a few examples. But have you wondered where this comes from and which company produces it? Jubilant Ingrevia is one such company. With a market cap of rupees 8,000 crores, Jubilant is the part of the famous Jubilant Bhatia Group. It operates in 3 segments: specialty chemicals, nutrition and health science, and chemical intermediates. Now you must be wondering, there are many life sciences companies out there, then why Jubilant? The company is trading at 16 times its earnings. Its top line grew by 42%, whereas its profit after taxes grew by 51%. That too in high inflationary pressure environment. Amazing, right? Numbers are okay, but you know what's the catch here? The company has just announced its capex plans of rupees 2,050 crores, largest in company's 4-decade history. To add a cherry on top, this will be funded internally, hence no debt. Interesting, right? Every plant with this committed investment is expected to be commissioned by financial year 2025. In specialty ethanol plant, ethanol will be used for internal use as well as to sell it to OMCs for ethanol blending program. Another hit. To know more about this program, head to our video on Dalmia Bharat Sugars, which we covered previously on our YouTube channel.
To give you a gist, the government needs 12 billion liters of ethanol by financial year 2025, which currently stands at 6 billion liters only. Huge gap. You ask about the revenue expectations from all the above segments. It's 9,500 crores by financial year 2027. The company's aim is to improve the revenue mix to high margin segments. After all this, China Plus One strategy is also helping company to gain attraction from domestic as well as international players.
The bottom line of this is that company might see margin pressure due to the increase in costs of power and fuel and uncertain geopolitical reasons. However, even after a volatile environment, the company is able to pass the cost and post positive margins. Hence, looking at the attractive valuations and long-term prospects, we are very positive about the company.
Our wireless world cannot operate without optical fibers. Data usage has skyrocketed in the past few years and we just cannot expect it to go down. And thus, our next company is a part of Vedanta Group and leading player in the manufacture of optical fiber and optical fiber cable. It is Sterlite Technologies Limited. This company has a sizable market share and significant manufacturing capacities along with integrated nature of operations. Now, how integrated? So, the company manufactures glass preforms from silica, and this glass preforms is then used to manufacture optical fiber. Moreover, the optical fiber is consumed internally to manufacture optical fiber cables, which provides cost competitiveness and boosts the company's profitability. The insatiable appetite for data has further compounded due to the remote and hybrid working models. So, according to a report by CRU, the total global mobile traffic data reached 65 exabytes per month at the end of 2021, and it is projected to grow over 5 times to reach over 250 exabytes per month in 2026. The demand for the products of this company is expected to be manifold due to opportunities like private and government capex plan, 5G capex, etc. For this, company has 678 patents across its network layers, with current order book at approximately 11,200 crores, with several multi-million-dollar, multi-year contract with North American telecompanies for optical fiber cable and optical interconnect contract with European Teleco and many more. Despite having high growth potential, a healthy order book and strong market position, we also believe that this company is available at good valuations.
As a research house, we are always focused on investing into fundamentally strong stocks. We focus on parameters like corporate governance, future capex, and industry growth potential. All the companies in our portfolio are backed by our strong investment philosophy. If you would like us to cover more such stocks, let us know in the comments below.